If I can have those that are in the aisle to go ahead and sit down, because we have a very brief 30 minutes with two of the leading voices globally in the investment sector. In a sense, we have the luxury to take a long-term view, which is something that's very challenging in today's environment. Not only the global financial crisis going back to 8, 9, 10, 11, thereafter having the shock, of course, of the global pandemic. We come out of it, we start to grow again, and then you always get a surprise that kind of shakes the apple cart, and that is Russia-Ukraine. On inflationary pressures, of course, because of the food supplies that come out of both those countries. Natural gas prices surging 500% in the last year, rising even before this crisis, and then a scramble for supplies of both oil and gas, even here in the UAE and in Saudi Arabia, and the US suppliers making shipments to Europe. And then there's a whole concept of what impact will this have? What are the ripple effects on globalization, the structure we've known for the last 30 years? We're starting to hear hints of pricing assets outside the US dollar. The US dollar being used as a weapon in terms of sanctions today, particularly with Russia. What are the broader implications of that? I just say in this context, in my coverage since 1990 of the UAE, and more profoundly in the last decade itself, it's one of the most globalized economies. So one of the key questions to His Excellency Khaldoon al-Mubarak is, when you see the systems being shaken up so much in such a short period of time, how do you protect what you've built over the last 4 to 5 decades and the acceleration over the last decade? Let's give a warm welcome to His Excellency Khaldoon al-Mubarak and the CEO of Blackrock, Larry Fink. Larry didn't want to control the debate this morning, but we had a roundtable looking at the next 2 years to 2025. And one of the things that was raised by me was the shareholders letter that went out Friday by Blackrock, talking about the rattling of globalization, perhaps the end of globalization, the developments we've had over the last 30 years. But I wanted to start, and I'll bring that up, but I wanted to start, how do you keep your eyes on the long view as a development fund first? I followed your investments into global foundries, and many thought, well, why is Mubadala, why is the UAE going into semiconductor chips when the prices are so cheap? What did you see when it comes to data demand and the proliferation of mobile phones? So if I was going to look long term, and let's just give it a horizon of 10 years right now, which sectors do you want to be in, regardless of what's rattling the cage in the global markets? How do you keep sight on the medium to longer term?
First of all, it's a pleasure being here today. I want to thank Minister Abdullah for his kind invitation and for this wonderful organization. Such a pleasure to be here in Expo, particularly after the last couple of years that we've all had. To have a gathering like this, finally, together in one room is such a pleasure. My experience professionally running Mubadala, and now we are entering our 20th year. 20 years running Mubadala, 20 years as CEO of this business. I've lived through all kinds of challenges over the last 20 years. The volatilities, the cycles of the market. As a long-term investor, you know, Mubadala ultimately is a sovereign fund, is a long-term investor. We look after sustainable returns. Generating sustainable returns on the long term. And that allows us to take decision-making a bit differently than maybe other funds. We do truly take a long-term perspective. And with that, what we have been successful in is taking thematic views, be it on sectors, be it on geographies, investing in them with conviction, and then having the patience to, you know, you mentioned an example, semiconductors. We took a thematic view many years ago on that sector. We invested in that sector, knowing with convictions. I think that the word I will always repeat is convictions. We had convictions that semiconductors are going to be an important part of the global economy, are going to be an important part of the technological evolution that's happening, and are a component that is so critical to pretty much everything. industrial, financial. There's not an industry that doesn't have a component of it that is linked to that sector. But it was also a sector that was not loved at that point when we started investing in that space. So we took a thematic view, we invested in it, we lived through various cycles, and again, that thematic view has proven to be accurate or correct in the way we all see today the importance and the prominence that semiconductors over the last 3 years has come back into the forefront, and COVID certainly helped with that. So I think from a general, answering you broadly and maybe microscopically using semiconductors, what we've tended to do and what's been successful for us as a sovereign fund and as Mubadala is to invest, taking a long-term view, looking for sustainable returns, identifying thematic areas that define our strategy to invest, focus on that, be very focused, be very disciplined, and then pivot when you need to pivot, because the markets do change and the cycles do change, and being able to have an organization that's able to pivot when you need to.
Let's clarify the shareholders' letter if we can, Larry, because everybody was interpreting it as the end of globalization, but having so much disruption over a 12-year period is testing the resilience of government systems, the private sector itself, the international governmental organizations as well, no doubt about it. But is Russia-Ukraine that much of a disruptor, where you have Russia aligning with China, China staying neutral, the majority of the Middle East staying neutral? It kind of has to as it straddles East and West. Does it shock supply chains so much that everybody's going to nearshore post-pandemic and not have these long-distance supply chains? Everybody was very shocked that we're rolling back the clock to the 1970s. How do you calibrate where we are with globalization today, and how do you maintain the systems that have been built over those last 3 decades?
Well, like Khaldoon said, it's great to travel again. It's great to be here. Mr. Minister, thank you for being the host, and it's fantastic to be with a group of people. It's always nice to be with my friend Khaldoon. So let me start off with that. Well, my letter did not say there's an end to globalization. I love the press, but they write whatever they would like to write. But what I did write about is how we frame globalization over the last 30 years is changing. And I do believe the Ukrainian-Russia is going to accelerate a change that was beginning even before because of COVID. We were able to operate, and I built Blackrock over the 30 years too at the same time, as globalization was beginning post the dissolution of the Soviet Union. We were able to have the world, and Thomas Friedman talked about the world as flat and how we were all able to be interconnected. And I do believe COVID really started to show that the world is less connected, and maybe we created too efficient of globalization, too efficient of supply chains. And I think that is one of the big reasons why we had deflationary pressures over the last 20, 30 years, because we created such efficiencies with these supply chains. And those supply chains began to break down because of COVID, because of remote working and all the issues. And we started to have real difficulties, like in chips and in terms of just-in-time delivery. And I do believe now, with Europe waking up and realizing its dependencies on Russian gas and oil, I believe the combination of what COVID has done, and now everybody looking at the dependencies in the commodity of oil and energy, and now even in wheat and grain, I think every company in the world is re-looking at their dependencies and asking themselves, are they too dependent in one region, one country? And I believe we are going to see an acceleration of nearshoring and onshoring. And that still means globalization, but a different framework, a different way of looking at it. As my letter wrote, there are going to be some very large countries that are going to be beneficiaries of more, I would say, more redundant manufacturing and assembly plants. I raise the question, if we are going to have to create those redundancies in supply chains, is that, that is inflationary? And two, what does it do to corporate margins too? Corporate margins have accelerated over the last 20 years to create these efficient supply chains. And now we may not be able to do that. We need to, our clients demand product just at will, and now clients are they're on waiting lists to get products. In the United States, car dealers are able to charge above list price to even get a car. So we're seeing some real difficulties now in how we are accustomed to supplies and delivery, and that is going to be changing how we think. I do believe it's going to change how we build out. It's going to change what globalization was and is. I do believe it's going to have a demonstrable impact on the emerging world as we move more manufacturing closer to demand. And so I do believe all of this is going to change world order in a very large way. At the same time, it's not necessarily all bad. It's going to be very good. But change represents opportunity. It represents long-term opportunity. But it also means that we need governments to be much more longer term, because this type of big, giant change is going to mean we're going to move businesses from one region to another, one country to another. And each country is going to have to learn to adapt, to grow, to be long-term. And I think I do believe humanity is going to be better off from this. So I am an optimist, but this is going to take time to work itself out.
Okay, there's so many offshoots, and I don't want to spend the whole session on Russia, Ukraine, but there's a couple of major things to look at. For example, with Mubadala Investment Corporation, you had a case where you were going to commit $6 billion to Russia in a partnership with the Russia Direct Investment Fund. But in actual fact, you haven't done that full allocation. Now, if I look at your portfolio, it's $100 billion into the United States. So many people have said, okay, what does Mubadala do with Russia? You take a longer term view. You're obviously very heavily weighted at a $243 billion fund with $100 billion in the United States. Can you straddle both? You have confidence in the dollar remaining the reserve currency today. Can you sit on the crossroads of East and West and say, we can maintain a balanced political position, but most importantly, as a fund, a business position?
I think, John, it's very important when you're running an investment institution such as Mubadala, and when you look at what we've been good at over the last 20 years, looking at the future, we got to stick to what we're good at. We're good at investing globally. We're good at building a diversified portfolio. We're good at managing risk. We're good at picking thematic views in terms of sectors that we want to invest in. That's what has been our recipe for success over the last 20 years, and that's what we will continue to do. So what is happening around the world right now, this cycle, this new cycle we're in right now, presents a lot of challenges, but it also presents a lot of opportunity. And what we have done consistently, and what we will do consistently, is continue to stick to our strategy, stick to what we do best, and continue to build a global portfolio, and investing and try to continue to invest wisely in that front. Now, when you ask me about specifically Russia, we've been investing in Russia probably for over 10 years.
Yeah.
It represents less than 1% of our portfolio. In the past, it's been a country that we've invested in. We've had a diverse, both public and private portfolio. No, leave that aside. We live in a world where we have to continue to manage carefully our portfolios and prudently. What is happening in this crisis between Russia and the Ukraine, with catastrophic consequences in terms of human life, and in terms of the impact it's having on economies all over the world. There's no question that it's in the best interest of the whole world that this crisis ends now, immediately. The sooner there is a political solution, diplomatic solution, that puts this war to an end, obviously the better it is for everyone. That is really, I think, what's important from us when I look at it from the context of how we look at where the world is going. Obviously, in this environment, we have to pause investment in this market in Russia. We can't, obviously, but pause and await to see how the situation settles. But going back to what we do as Mubadala, that doesn't change our convictions in terms of how we invest and where to invest and how we go about it.
Good. I'd like to look, Larry, one other implication here. If you kind of tune in, you see Saudi Arabia may be willing to price oil and gas in renminbi. The BRICS Bank in December, the new development bank based in Shanghai, floated a 2 billion renminbi bond for the first time. Russia's asking to be paid in rubles for its oil and natural gas. You could see a scenario where it creates the environment, and you address this in your shareholder letter, that the cryptocurrency could be shaped in partnership with Russia, China, the oil and gas producers. And if the US is using the dollar as a weapon on sanctions, which it has done, that it accelerates the role of the US dollar as a reserve currency. How do you see it from a man who manages $10 trillion of wealth today? Is this the beginning of that transition, or does it accelerate the transition?
Well, I think there is a need for a digital currency. Whether it's a digital dollar or a digital yuan or a digital euro or whatever it may be, but I believe with even in this country, so many workers are here who remit their compensation back home. We're talking tens of millions of people who are doing this, and they're paying very large fees to remit that money. The payment system in the world for the amount of transaction is just mispriced today, and I think this is what's leading towards a greater utilization of a digital currency one day. And so, and also in some countries where 50% of the economy is a dark economy, for safety and for security, having more of a digitized currency is going to really elevate countries too. So I look at it more of a social reason why we need more of a digitization of currency. I truly believe that we could save so many of these workers, depending on what they pay. In some respects, they could pay as much as 4% in the remittance to, depending on which banks pay and charge and all that. But there is a mechanism now where we could be really reducing these fees and give back the money to those workers as a remittance. And then, you know, in talking to political leaders of various different countries, with the amount of as I said, a dark economy, that you could see more payments flowing naturally through the system. So I start out with the foundation. There is a great need for digitization of currency. There is no need for hard currency anymore. And then whether that is the hegemony of the dollar or the hegemony of three different vehicles, we'll see how the market all plays out. I mean, some of the suggestions that you just brought up is more political, and I'm trying to focus on the social need of why we need digital currency. So I'm a very large believer of a stable coin type of currency, not a Bitcoin, a stable coin that is based on a currency, or each country or a country creates a digitization of that.
You could have a basket of currencies, right?
Or you could create, that would be a fantastic vehicle, a basket of a world currency. That could work out too. But obviously that represents a lot of issues. What are the role of banking in that? Who plays that role? Who knows who's doing all the transactions? So you have a lot of privacy issues. So I'm not trying to suggest these are easy solutions. But I do believe the backdrop of what is going on with Ukraine and Russia, and the role of the U.S. dollar and sanctions, I think it's just going to accelerate the conversation of the utilization of some form of digitization of a currency.
Okay, I'd like to get your opinion, short answers from both of you if I can. Has the Iron Curtain gone back up again, though? Is that how profound the Russia-Ukraine situation is? I mean, as I said, you're a very globalized economy. Do you worry that this leads to protectionism and the effort to isolate Russia, and then it has the domino effect? Khaldun?
So the last couple of years, particularly with COVID, we've seen the two sides of globalization, the good side and the bad side. At the beginning, that supply chain disruption and the reaction of many countries and many companies around the world on that defensive reaction that created a massive supply chain disruption and the movement towards localization and interdependence and away from, independence and away from interdependence. That was one of the, I would say, the negative sides of what we saw with COVID. But on the flip side, you look at the reaction of the world in terms of working together to solve COVID, which happened through innovation. The innovation revolution that happened in life sciences, in the development of vaccines, in creating these supply chains to solve this global problem. That wouldn't have happened without actually interdependence. Wouldn't have happened without cooperation. So you can see that ultimately, again, I'm advocating here for globalization. The solution in globalization, the solution in collaboration and in working together towards innovation is a better solution. It's a better solution. Now, having said that, we've started down the road of that disruption of that supply chain that has led to, I think, a transition that is happening, that this current crisis is only exacerbating and moving towards what Larry is describing. I don't think Larry is saying that globalization is over. But I think what he is saying, and what I do agree with, is you're seeing the creation of a new world order. And that is playing itself out. And that creation of this new world order has ramifications on supply chains, which is really at the core of this, on currency movement, on reserve currencies, on how we look at crypto and digital exchanges and digital currency, and how that's going to play its way into trade. At the end of the day, we are in the UAE, and the UAE is built on essentially connectivity. It's built on trade forever. We trade with East, West, North, South. That's what made the UAE and will continue to make the UAE a successful and vibrant economy. In this new world order that's developing, we in the UAE will find our place to continue to grow, to continue to evolve, to continue to be able to trade East, West, North, South, North America, East Asia, North Asia, etc. And figure out also at the same time how we're going to manage through this transition that's happening across the board, from supply chains to currency, and how we can maximize making the UAE an attractive location to be able to operate in this new environment.
This is really interesting. Larry, does it mean that it's very difficult to manage medium-term and long-term risk, as His Excellency is talking about, that democracies are overrated and we can't plan ahead for energy supply chains, to mend the supply chains that we see today, over-dependency on Russia and Ukraine for wheat, for example. We don't seem to have the bigger picture in mind when we're planning out like a UAE or China does. What do you think?
So I would just, let me start off, I'm a globalist. I'm a big believer that globalization is going to be intact. It's evolving, it's changing. It's not what it's going to be, what it was for the last 30 years. It's going to change. And all those issues that you mentioned, Jean, to me, these are short-term issues. We will find solutions. I mean, in the next 2-3 years, we may be in a very inflationary environment. But,
is it parallel to the 70s, or is that overrated?
I think that's very overrated. I think we do have a transition of very high inflation as we build new supply chains, as we build new ways of creating power, whether that is through green energy or building out more sources, mitigating demand. I do believe we will definitely find new sources for food. We have new technologies for food, And this is, I do believe food production, this is going to be one of the great highlights for Africa in the future. And so I look at different places in the world that we're going to be able to find new sources. But we're in this transition period of time, and transitions are very hard for democracies. They're very hard because we don't know how we're moving forward. But I'm a big believer in the democratic process, and democracies will find a way of doing this. But transitions are all very hard, and transitions are always hard for a good part of the global population. And in a transition, it requires long-termism, it requires long-term processes. I would tell you from our investors, I have not seen any mitigation of our investors' attitude about where to put their money and where to go. Oh. And so, yes, we have rising interest rates now because we have rising inflation. We have value stocks that are soaring. We have growth stocks that were soaring a year ago. They're falling. In the long run, we equalize, we find solutions. And so I'm not that worried about this transition, but I do know this transition is going to be hard, it's going to be difficult, but I believe in the outcome. About 4, 5, 6 years later, we're going to have many solutions.
That's interesting because one would argue that we were over-dependent on Russia, and Ukraine should have seen it. Over-dependent on Russian gas into the European Union. Pretty obvious. We have eastern states that have 100% of their gas from Russia. Totality of the European Union is 40%.
But now they're learning they're not going to, that was wrong, and so they mitigate it. And during the transition, it's hard, but they'll find different sources. And as I said, if we have elevated hydrocarbons at $120 for a long time, it stimulates new technologies, it stimulates new behaviors. Elevated wheat prices will create new technologies, new outcomes. I mean, that's the magnificence of humanity. As Haldoon talked about how we quickly found a solution to COVID with the vaccination. I am bullish on humanity. I'm bullish that we find solutions. I'm not here to tell you it's not going to be hard or lumpy in the short run, but we're going to find solutions, and those solutions are going to represent great long-term investment opportunities. At the same time, it's going to create this transition that is very tough.
That's fantastic transition for me to Haldoon for the last word here. We have about 2 minutes. Mubadala partnering with ADNOC, with Masdar, a vehicle that you've chaired in the Mubadala portfolio since its existence. Investments into hydrogen. But again, if I was mapping, ESG swang into play during the pandemic, and everybody was rushing out of hydrocarbons. As Larry said, transitions are difficult. So how do you balance the two as an investor, number one, and then say, well, this was pretty obvious. You can't run from one technology to the other. And what lesson did we learn out of it? Gas as a transition fuel. You're invested in Israel. You're invested in Southeast Asia. Do you stay the course? We want African gas to come to the fore. The Eastern Med is a good counterbalance to Russia, right? To have a balance of supply. And what influence will this have on COP28? Is it the message that we make the transition, but we need to take care of access to 750 million people who don't have electricity on a daily basis? How do you see it?
Well, I see it in the sense that don't forget the word transition. I think we forgot that word. The principle of energy transition is happening. That is unquestionable as far as I'm concerned. But leaving the current crisis aside, what's happening in terms of the energy crisis was in the works for the last couple of years. When essentially, for many wrong reasons in my view, we stopped investing, or not we, many companies and many countries around the world stopped investing in the energy supplies, in that supply chain, in oil, in gas, in new development, and just shifted completely on the energy transition cycle. The energy transition cycle is happening and will happen over a period of time, and that requires substantial investment, which is happening. But in parallel, managing the energy supply situation globally is crucial. And I think what the world missed in the last couple of years is maintaining that balance in parallel. And the impact of what we're seeing today is substantially, I think, larger because of that. So on an ongoing basis, now going back to your question, and here I'm going to answer it from a Mubadala sense, we took a view 2006, almost 16 years ago, on where renewables are coming, where they're going, and the role that we believe back then, thematically, renewables will play in terms of the global energy solution long term. So we started invested 16 years ago in this. We started investing when solar, I remember investing in a solar plant generating 30 cents a kilowatt of solar power. Completely, obviously uneconomic back then. But it's only by doing so, and doing so over 16 years, that we've been able now to generate power through investments we've made at 1.25 cents a kilowatt. So we've taken it down from 33 cents to 1.25 cents a kilowatt by having a strategy, consistently investing over 16 years, and taking a long-term view. But by the way, we didn't do that and then switch the light off and said we're going to stop all our investments in the oil and gas side. We didn't. We continued to do so. And we continued to do so because we believed inherently that that is also part of the solution. So the key here is transition, and the key is managing the transition in the most optimal way with a future in the short to medium term that will include, I think, a mix of conventional and non-conventional and renewable energy as solutions that the world has to continuously invest in, by the way, in Africa, in Asia, in Europe, and elsewhere, and with a view that there will be an energy transition at some point, and you have to be part of that journey, and it's a journey.
Final 30 seconds, and just a quick question to you, Haldun, if I may. You remember the World Government Summit?
That's not fair. Larry's got to
go. He can weigh in on it. When His Highness Sheikh Mohammed bin Zayed said, if we plan accordingly today, in 50 years when we export our last barrel, right, we'll be prepared for this transition. Realistically, behind the scenes, do you plan 20 to 30 years where demand's probably 50% less than what it is today? And from your viewpoint as Mubadala, you say the UAE is prepared for that transition. There's no panic because you don't have the oil revenues.
I think what you're quoting in terms of His Highness Sheikh Mohammed bin Zayed, you will find a similar quote from His Highness Sheikh Mohammed bin Rashid. You will find a similar quote from His Highness Sheikh Khalifa. And of course, you will go back many years ago, you'll find similar quotes from His Highness Sheikh Zayed. And that is pretty much ingrained in the DNA of an Emirati. So when you ask me this question today, certainly we are planning 50 years ahead, 40 years ahead, 30 years ahead, 10 years ahead, and we're confident. I think anywhere you go in the UAE, you'll see what I'm trying to reflect today in terms of confidence, clarity of vision, and a long-term view. And knowing that we will get there. We will get there with the right strategy, with the right execution. And all that can only happen with both leadership and the people. And we have both.
Good. I ran over time. Should I give Larry the last question?
You have to.
Okay.
Or else I'm not leaving.
That was a message for you, right? So you guys don't get upset. His Excellency, we have him later this afternoon. I think this audience would love to hear what you think, not long-term, Larry, but let's say in the first panel we looked out to 2025. What is the biggest global risk in the next 2.5 years, and can we avoid it? Your microphone's too far away from you. Thanks. That's the last word.
Well, I would say the most short-term risk is high inflation for various reasons. Inflation is going to be with us beyond energy, beyond food, but it's going to be, as I said, as we reevaluate our supply chains and how we manage those. And so that will be with us. And so the big question will be, will the central banks overplay their hand? The central banks have a very hard task. They don't have the tools to stem inflation if it's supply shock driven. And that's what we're seeing at the moment. It's more of a supply shock driven. And the only way they can stop that type of inflation would be through raising rates enough to create a recession. And I don't believe that's what they are looking to do. So it's going to be a real balance of how much will society accept high inflation over that short period of time until these supply shocks are behind us. And I believe beyond that, we're going to see mitigating inflation. And so it is my view that central banks are going to have to be more moderate in terms of their interest rate increases that are forecasted. Right now, you have the 10-year Treasury at a 250, you have the 3-year at 260. So the market's already beginning to talk about maybe is there a recession when you have that type of inverted yield curve already. And so to me, those are the risks. We do not need to go into recession. We have a robust world that can mitigate much of this, but we're going to have to arrest inflation.
Great. Number one, thank you for the invitation again as our host today, Abdullah bin Tuk Almari. I would strongly encourage you joining us, our session at 16:30, when we take a deep dive on the emerging markets of the world, led by His Excellency. It'll be interesting because some of those shocks that you're talking about, Larry, is going to hit the emerging markets disproportionately, and sort of the response. The UAE response is to open up new trade partnerships, which not sitting on your laurels is kind of the rule of the game here. Let's give a fantastic round of applause to our panelists, Larry Fink and His Excellency Khaldoon Al Mubarak, and thank you very much.